Imagine the nation's tax collector, the institution that keeps government lights on, becoming the epicenter of fraud, political warfare, and betrayal. What started as petty frauds escalated into a scandal that changed the face of South African governance. This is SARS, unmasked. Fraud at SARS didn't begin with boardrooms and consultants. It began in offices and phone booths. In 2009, investigators uncovered a VAT refund syndicate claiming millions from SARS through dozens of fictitious companies. Arrests in Kimberley exposed how organized fraudsters set up fake businesses just to siphon refunds. A simple idea, repeated at scale. It was small money compared to what came later, but it showed how fragile the refund system could be. Localized scams followed. Mining-related VAT claims, supposedly legitimate, were turned into clever paper crimes. In one Klerksdorp/Elandslagte case, insiders and advisors conspired to route fake mining VAT refunds through the system. Years later, fugitives were tracked down and jailed. Small victories in a long fight. Then came the betrayal from within. Monica Pretorius, a SARS auditor trusted to police the books, used her authority to approve fraudulent VAT refunds worth 54 million rand. Her job was simple: safeguard the system, check the numbers, and protect taxpayer money. But instead, she handpicked which cases to handle, quietly steering audits into her own hands. Once inside, she manipulated records, overlooked red flags, and approved payments to ghost tax practitioners, people who existed only on paper. In return, Pretorius didn't just collect envelopes of cash. She was rewarded with a brand new car, regular payments, and the kind of lifestyle no ordinary civil servant could afford. It was a textbook case of an insider using their access to bleed the system dry. Here's how her scam worked. 1. Fake tax practitioners created companies and filed fraudulent VAT returns, claiming they had paid large sums of VAT through purchases. 2. Pretorius, as the SARS auditor, had the power to review and approve these claims. Instead of flagging them as suspicious, she signed them off as legitimate. 3. SARS then paid out refunds, money meant to go back to real businesses, into bank accounts controlled by the fraudsters. 4. Once the money was paid, the syndicate kicked back a share to Pretorius, in cash, gifts, and even luxury items. It was simple, it was audacious. And because she was an insider, the scheme bypassed every safeguard in the system, and it went on for years. Millions that should have gone to schools, hospitals, and public services were instead diverted into the pockets of fraudsters. Every false VAT refund Pretorius signed off was another nail in SARS's credibility, but the house of cards eventually collapsed. Investigators pieced together a paper trail of manipulated files, unexplained assets, and irregular payments. Witness testimony sealed the case. In 2024 to 2025, the courts finally closed the loop. Pretorius was convicted and sentenced to a long jail term, a dramatic fall from inside the house. Once an enforcer of the law, she became its most infamous violator. Her story was a warning that when the guardians turn greedy, the entire system is at risk. Fraud became industry. Between 2008 and 2015, a sophisticated VAT scheme run by two businessmen, Fernandez and Warner, looted SARS of about 115 million rand. They built a network of shell companies and fake invoices, hiding the trail in plain sight. Here's how it worked. They set up shell companies, businesses that looked real on paper but didn't actually trade. These companies issued fake invoices to each other, creating the illusion that massive amounts of goods and services were being bought and sold. On those fake transactions, they then claimed back VAT refunds from SARS. To the taxman, it looked legitimate, because every invoice was backed by another company in their own network. In reality, no goods were ever delivered, no services ever performed. It was an elaborate paper carousel, money conjured out of thin air. And while SARS was bleeding, Fernandez and Warner were living large, using the proceeds to fund properties, flashy cars, and a lifestyle most South Africans could only dream of. When Warner pleaded guilty to hundreds of charges, the sentences were severe. Life plans ruined, properties seized, and a blinding exposure of how organized tax fraud can be. Small scams, inside collusion, classic criminal enterprise. But amid these court cases, another force worked quietly. Not criminals at the margins, but political actors and international consultants who would reshape SARS itself. In 2014, headlines claimed SARS had a covert rogue intelligence unit, a secret cell accused of spying on politicians and conducting irregular operations. Media exposes fan public outrage and political pressure, but the story would not stay simple. Independent reviews, inquiries, and later public admissions showed the narrative was deeply flawed. Some reports were retracted, and SARS itself issued apologies for the damage done to employees and the institution. The so-called covert unit became a weapon in a political fight, and SARS paid the price. The real lesson: allegations, true or false, can be used to dismantle trust. SARS had been a world-class tax agency, admired across Africa for diligence and results. But after a political pivot and the appointment of a new commissioner, an external overhaul was pushed. Global consultancies took on contracts to redesign SARS. One consultancy, Bain & Company, later admitted its work failed to meet professional standards. Investigations concluded that management restructuring, consultant projects, and political meddling combined to hollow out capacity inside SARS. The fallout was seismic. Bain refunded fees, faced government sanctions and a public ban from state contracts, and in 2025 announced the closure of its South African client-facing consulting operations, a dramatic end to a once-trusted partnership. The story of Bain and SARS is not just about bad advice. Inquiries concluded the changes helped facilitate institutional weakening at a time when SARS needed strength. Some call it gross negligence. Others call it deliberate sabotage tied to state capture. Whatever the label, the effect was the same: a near destruction of an institution vital to the country's fiscal survival. Every rand lost to fraud or destroyed through mismanagement is a school not built, a clinic not stocked, a road left to crumble. Beyond the headlines are civil servants who lost careers, taxpayers who lost confidence, and a weakened state now fighting to rebuild. The scandals at SARS teach a brutal lesson. When institutions fail, everyone pays. This is not just a tale of white-collar crime. It's a story about how power, greed, and manipulation can corrode the institutions meant to protect us. SARS survived, but the question remains: how many more institutions will be next if we don't learn the lessons?